Everyone knows Nvidia makes the AI chip. Almost nobody talks about what makes the Nvidia chip actually work. There is one component inside every single AI chip, in every single data center, running every single AI model in the world that is just as critical as the GPU itself. Without it, Nvidia's chip doesn't scale. Without it, AI slows down dramatically. Without it, the economics of running AI fall apart. It is called HBM, high bandwidth memory. And the companies that make it have been quietly generating some of the biggest returns in the semiconductor market. SanDisk is not an HBM company, but it might be part of what comes next. Micron revenue up 196% year over year last quarter. Gross margins at a company record of 74.9%. SK Hynix stock up over 280% in the past year. Overtook Samsung in operating profit for the first time ever. Most investors buying Nvidia miss this trade entirely. Here is what HBM actually is, why it has been printing money, and what comes next. Let's go. Start with something you already know. Your laptop has RAM, the short-term memory that lets it run multiple programs at once. A GPU has the same thing. Memory that feeds data to the chip constantly while it works. The problem: regular memory sits on a flat circuit board next to the chip. Data has to travel horizontally like walking down a hallway to get a file from a cabinet. HBM solves this by stacking multiple memory chips vertically directly next to the GPU and connecting them through tiny vertical channels. Here is the analogy that makes it click. Regular memory: your office is on the 3rd floor. Your files are in a storage room in the basement. Every time you need a document, someone has to go get it. HBM: everything you need is already on your desk. You reach out and it is there. Same information. Completely different access speed. For AI, this matters enormously. Training an AI model or running one means moving billions of pieces of data between memory and the processor, thousands of times per second. The faster that movement, the faster the AI runs. HBM is why Nvidia's GPUs can run AI models that would have been impossible 5 years ago. Every Nvidia Blackwell GPU ships with 192 gigabytes of HBM3E, the current standard. The upcoming Vera Rubin platform requires 288 gigabytes of HBM4 per unit, nearly 3 times the memory of Blackwell. More AI compute, more HBM. Every single generation. 3 companies make essentially all the HBM in the world: SK Hynix, Samsung, Micron. SK Hynix is the dominant leader. They supply approximately 62% of the global HBM market. They started betting on HBM in 2013 before most of the industry took it seriously. That early bet is now worth a lot. SK Hynix supplies roughly 70% of Nvidia's HBM4 for the upcoming Vera Rubin platform. They posted record operating profit in 2025, overtaking Samsung for the first time in history. Bank of America named SK Hynix the top pick in the global memory sector. Goldman Sachs expects them to maintain over 50% HBM market share through at least 2026. Morgan Stanley raised their earnings forecast for 2026 and 2027 by 56% and 63% respectively. Micron is the US-listed option. Last quarter revenue of $23.86 billion, up 196% year over year. Gross margins hit a company record of 74.9%. Earnings per share came in at $12.20, well above the $9 estimate Wall Street had expected. Micron's entire 2026 HBM production is sold out. All of it. Pre-contracted. This is what pricing power looks like in a constrained market. Wall Street expects Micron to earn approximately $31 per share in 2026, more than 4 times last year's profit. Here is why the supply story drives everything. Bank of America calls 2026 a memory supercycle comparable to the technology boom of the 1990s. They forecast global DRAM revenue to surge 51% and NAND revenue to rise 45% year over year. HBM market approximately $17 billion in 2024, projected to reach $100 billion by 2028. And HBM production from all 3 major suppliers is fully sold out through 2026. Some analysts expect the shortage to continue into 2027 or 2028. That only happens in a shortage cycle. Constrained supply, surging demand, rising prices, expanding margins. That is the HBM story. And it is already playing out in the earnings reports. Most investors are still looking at the GPU. Very few are looking at the memory. Here is where the story gets more interesting. HBM has a fundamental ceiling: capacity. Nvidia's current Blackwell GPU has 182 gigabytes of HBM3E. The latest large language models like Meta's Llama 4 can require up to 5.4 terabytes of memory to process a long conversation. 192 gigabytes versus 5.4 terabytes. That is the gap. The memory wall. That gap is not a performance problem. It is a system architecture problem. When an AI model runs out of HBM space, it has to pull data from the next tier of storage, which is dramatically slower. The GPU ends up sitting idle waiting for data, which means you are paying for expensive GPU time while it does nothing. HBM4 will provide more capacity per stack, but it will not close this gap on its own, which leads to the next layer. HBF stands for high bandwidth flash. AI is no longer compute limited. It is memory limited. HBF is the industry's answer to that problem. Here is the easiest way to understand it. You know how your phone and laptop use flash storage, the memory that holds everything even when you turn them off. Flash is cheap. Flash holds enormous amounts of data. But flash is slower than DRAM, which is what HBM uses. HBF takes that flash memory and packages it like HBM stacked vertically, with thousands of parallel read channels to dramatically increase its speed. Back to the office analogy. HBM, everything on your desk. Instant access. Limited space. HBF, the bookshelf directly behind your chair. A little slower to reach, but holds 10 times more material. Regular SSD, the storage room down the hall. Slow, but massive capacity. HBF sits between HBM and an SSD, a new middle layer in the memory hierarchy. The numbers HBF can deliver over 1,238 gigabytes per second of bandwidth, more than 200 times faster than a standard SSD. And it holds 512 gigabytes per module, compared to 64 gigabytes for HBM4. The trade-off: HBF is slower than HBM and works best for reading data, not constantly rewriting it. That makes it ideal for AI inference, where you are mostly reading a pre-trained model to generate responses rather than AI training, which requires constant writes. SK Hynix ran simulations combining HBM and HBF together alongside Nvidia's Blackwell GPU. The results were striking. Performance per watt improved by 2.69 times. The system could handle 18.8 times more simultaneous user queries. Workloads that previously required 32 GPUs could run on just 2 GPUs. That is not a small efficiency gain. That changes the economics of running AI at scale. But, and this is important, HBF is still early. First samples are expected in the second half of 2026. First commercial AI inference devices in early 2027. Meaningful market impact is likely 2029 or 2030 at the earliest. This is why HBM alone is no longer enough. Split this into two groups. Because the investment thesis is different for each. Group 1 HBM today, where the money is already flowing. SK Hynix, the most direct HBM play. They supply 62% of the global market. They are Nvidia's primary partner. Their 2026 HBM supply is sold out. SK Hynix is not a US-listed stock. It trades on the Korean exchange. American investors can access it through OTC markets under the ticker HSSCL or through ETFs with Korea exposure. Micron, the cleanest US-listed option for HBM exposure. 2026 HBM capacity fully sold out. Record revenue, record margins. Entire business benefiting from the AI memory supercycle. Micron also has HBM4E in development for Nvidia's Vera Rubin platform. They are positioned across HBM, DRAM, and NAND, the broadest coverage of the AI memory stack among US-listed names. Samsung, the largest memory company in the world. They struggled with HBM4 qualification in 2025, but have now entered mass production. If they close the gap with SK Hynix on HBM4 quality, they could capture up to 35% of the market by end of 2026. Samsung trades on the Korean exchange. Less pure-play HBM exposure than SK Hynix, but massive scale. Group 2 HBF is an early option where the story is forming. SanDisk, pure-play NAND flash company spun out of Western Digital in 2024. NAND flash is exactly the core material inside HBF. SanDisk signed a memorandum of understanding with SK Hynix to jointly develop and standardize HBF. They are targeting first HBF samples in the second half of 2026. The broader NAND cycle is also working in their favor. Their 2026 NAND supply is reportedly sold out. Q2 2026 revenue was up 61% year over year. Gross margins went from 29.9% to 51.1% in a single quarter. Q3 guidance calls for $4.4 to $4.8 billion in revenue, with margins of 65 to 67%. SanDisk is currently a HBM-adjacent NAND story with HBF option value on top. SK Hynix, also in Group 2. They are positioning as the company that supplies both layers of the memory stack, HBM for speed, HBF for capacity. If the hybrid architecture becomes the data center standard, SK Hynix benefits from both sides. The bull case is clear, but the honest version includes the risks. Risk one: memory is a cyclical business. The reason these stocks are at record highs is a severe supply shortage. New capacity takes 2 to 3 years to build. When it comes online, prices can fall fast. SK Hynix is investing $15.1 billion in new capacity. Micron is spending $20 billion. Samsung is ramping production 50%. The shortage will not last forever. When supply catches up to demand, margins compress. Risk 2: HBF takes longer than expected. HBM took approximately 7 to 8 years from development to widespread adoption. The optimistic case for HBF is faster because companies are building on existing expertise. But fast is relative. Meaningful revenue from HBF is likely 2029 or later. Risk 3: the AI spending cycle decelerates. The entire memory supercycle depends on hyperscalers continuing to invest heavily. Google, Microsoft, Amazon, and Meta have committed enormous AI capital expenditure in 2026. If that spending slows, memory demand slows with it. Here is the map. Nvidia builds the AI chip. HBM makes the AI chip actually work. SK Hynix and Micron make HBM. AI models are getting so large that HBM alone is not enough. HBF is the next layer: more capacity, lower cost, positioned between HBM and storage. SanDisk and SK Hynix are building that standard. HBM is the present trade. It is already in the earnings numbers. HBF is the next trade. It is still in the formation stage. Most investors watching Nvidia have not looked one layer deeper. That layer, HBM, has already generated some of the biggest returns in semiconductors over the past 2 years. The one after it, HBF, is just getting started. If this breakdown was useful, hit like it genuinely helps the channel. Drop any topics you want covered next in the comments. I read them all. Subscribe and hit the bell. The next video covers whether the AI memory supercycle has already peaked or whether there is more room to run. You don't want to miss that one. See you there. This is market commentary and historical data analysis only, not a buy or sell recommendation. All investment decisions are your own responsibility.